So credit cards. First of all, the way credit cards work, and the one thing that you need to keep in mind at all times if you decide to spend on a credit card is the main way credit card companies make money is if you don't pay your credit card back and start incurring fees and interest. So keep that in mind, because that's the key consideration when you use a credit card, that it's not just there for you to spend and pay back whenever you feel like it. The credit card companies are there to make money, and the way they do that is when you don't pay it back. So there are other ways credit cards companies can make money, and that's every time you spend on a credit card, the credit card company get a transaction fee from whoever the vendor that accepts the credit card is, but that's not enough for them to be profitable. So if you're someone that just spends on your credit card and pays it off in full every month, you're not an ideal customer for a credit card company. So that's not who they're targeting. What they want is for you to spend money essentially that you don't have. So you have no intention of paying back that credit card in full, so they can start charging you interest. Now, traditionally, aside from payday loans, credit cards have the highest amount of interest. So most common, you see it at the lower end of 20% all the way up to 50% and beyond in interest. So what that means is if you spend £1,000 on a credit card and don't pay it off in full, you then could pay up to 50% in interest over the year on that balance. So if you don't pay that credit card off in full and you keep that £1,000 on the credit card on there for a year, you will pay £500, for example, if you had 50% interest rate back in fees. Now, a common way credit card companies get people is by giving them an introductory offer. So they say interest-free for 12 months, you won't pay any interest. Encourage people to spend on it, even start increasing their credit limits if they start using up all of the credit that they first gave them. And at the end of the year, you start then paying that interest back. And quite a lot of the time, what people will do, and the credit card companies will encourage this, is just pay off the minimum payment. So, you know, it might be £20, £30 a month, and people think, oh, great, I'll pay off the minimum payment and go along with that. But every single day you have a balance on that credit card, you are incurring interest. And when you don't pay that off, the interest is added to your balance, and you then pay interest on the interest. So you end up finding yourself paying back minimum payments for years and years and never actually clearing off very much of the balance at all. So quite commonly, people end up paying more interest than they actually spent on the credit card itself, and end up getting themselves into trouble with a lot of credit card debt. And that is the way credit card companies essentially make money. So if you're someone that's thinking of starting to use a credit card, they are useful in a couple of ways. One is that they help build your credit score. As long as you're paying them back in full every month, it just shows that you're a responsible borrower. You spend money on a credit card and you pay it back in full. That's great. Also, and one way credit companies will lure you in is by offering you cash back if you use your credit card. I personally use American Express, which gives you points, and then you can use that for air miles. You can use that to spend on Amazon, which is great. Build up those points, spend them, but pay off the credit card in full, because like I said, if you don't do that, you'll start ending up accruing lots and lots of interest. So that is probably the best way to use credit cards, and the only way I'd suggest it. Credit cards are not an emergency fund, so if you need to use a credit card for an emergency, I would recommend not doing that. You should really have an emergency buffer in your bank account. I mean, you may find that your last resort is a credit card. If that's the case, then make sure you've got a plan to actually pay it back. If you're someone that already has balances on a credit card or credit cards, it's not the end of the world. There are ways that you can get yourself out of that. So the first way is, I would suggest being very strict and not just paying the minimum, because if you just pay the minimum, you're going to be paying that for years without clearing off that balance. And also, if you ever want to apply for a mortgage, if you want to set up a business and borrow money for that business, if you've got money on credit cards, it looks bad. Lenders don't like people that have lots of money outstanding on credit cards. It just shows that you borrow money and you can't pay it back, essentially, or you refuse to pay it back. Or you're not very savvy, because why would you, if you had money in the bank, keep balances on credit cards and pay loads of interest on them? It doesn't really make much sense. It shows that you're not very savvy with your money, and therefore your score will be impacted negatively. So the first thing to do, and if you do have a balance on a credit card and you're paying all of this interest, it's a priority to start reducing that balance. Not just pay the interest, because that's great from the perspective of a credit card company, because they'll collect that interest all day long, and keep doing that for as long as you don't clear the balance on the credit card. So the first thing to do, and you can do this quite easily most of the time from the app or by contacting a credit card provider directly, is they will set up a direct debit which will collect every month the minimum that you need to pay to make sure that you're not defaulting on your payments. You can actually increase that direct debit to pay off more than the minimum required. So if the minimum is £20 a month, increase that as much as you can, say £100 a month, £200 a month, whatever is affordable, but it should be a priority from your income to start paying off those credit cards. So that's the first thing I would recommend doing, is starting to pay off more than the minimum, and do that automatically. So increase the direct debit to come out the day you get paid. Make sure that direct debit is set out to come out for £100, £200, whatever that might be. So you're doing more than just the minimum. The other option you have as well, which is called a 0% balance transfer credit card. So other providers want that debt and they want you to pay them the interest instead of paying it to whoever you've got it with at the moment. So what they'll say to you is, right, you can transfer whatever the balance is on that credit card over to us, and we won't charge you any interest for 12 months, 18 months, sometimes even 2 years, which is great, because what you can then do is transfer that balance over. You're not paying any interest. So what you would be paying interest, pay that off the balance of the credit card. So instead of just paying interest and not reducing how much you owe, you are now paying off the credit card balance itself. Try and do it so you can pay off the whole balance before the interest occurs with the new provider. Otherwise, you're doing the same thing again and you're just going to start paying interest to them. And some of the time it might be even higher interest when that kicks in. The other option to consider is if you've got quite a lot of credit card debt, you may want to consider looking at a loan, which is called a debt consolidation loan. And loans, because they are a fixed monthly amount you repay and they have an end date to them, so 1, 2, 3, maybe 4, 5 years, the longer obviously that you borrow for, the lower the monthly repayments are. You can then borrow, say, £5,000, use that money to completely clear off your credit card, and you're now paying a fixed monthly payment back with an end date to clear that debt off. Why also I would consider that is because loans tend to have a much lower interest rate. Typically, you're looking at a good rate could be about 5% all the way up to maybe 10, 15%, which is still a lot lower than what the credit card interest is. So that is another option, and it's called debt consolidation. And that is an option of that is an option available to you in terms of taking out a loan. And also it will improve your credit score in the long run, because you have now a fixed amount that you are paying back every month and you're reducing how much you owe, rather than an amount on a credit card that just sits there and you don't really clear much of it off. If you're someone that doesn't have any credit card balance, but you are now using credit cards, just make sure you are only spending on credit cards amounts you know you can pay back in full every month. Otherwise you will fall into this trap. Just don't spend money you don't have, essentially. I know it sounds obvious, but so many people do it and they end up regretting it because they kick the can down the road and think, oh, I won't have to pay any interest in a year. I'll have cleared it by then. People don't. There's a reason why there are so many credit card companies out there, and they make millions, if not billions, in interest, because they're very smart at getting people into that trap of giving them the introductory offer, getting them to spend on it, and then starting to lump them with interest. And that interest only gets worse and worse, and you end up getting stuck. So don't do it. Only spend on credit cards for the benefits of getting the points, and if you're going to pay it off in full every month, because obviously that will help your credit score. Aside from that, don't do it. If you're not very confident, or you're not able to be quite strict with yourself, then just don't use a credit card, because the benefits of using it and paying it off in full are not outweighed by you just building balances and not paying them.